Palantir's biggest rival just emerged, and most investors have never heard of them. Plus, Meta fired 8,000 workers, and Wall Street cheered. Welcome back to Navellier Market Buzz. So, Dad, it seems like earnings season is brutal. Stocks have to beat on everything and guide higher just to survive, but Meta took a different approach. They fired 10% of their workforce, and Wall Street loved it. Why is that?
Well, because they're an AI applier, and the more people they lay off, the more it means that AI is working. Obviously, they're spending a fortune on AI. Their margins are now under compression, and this isn't the first time they've done this. Those 10% of the workforce is 8,000 people, plus they had 6,000 open jobs that they're not going to fill now. So that's 14,000 jobs that are now gone. So this is the fear that a lot of people have, that the machines are going to take over. We don't need people anymore. And that's not really true, but the transition is painful. And Meta is celebrating that, and it doesn't fit our criteria at all, but it's interesting to watch. And also Microsoft just announced that they're going to lay off some people. They have an early buyout offer. So I think almost 7,000 people. So, yeah, it's getting to be interesting out there in software land.
So it seems like this is about efficiency. There's fewer workers, better margins, but Meta's pouring billions into an AI infrastructure. Is that sustainable?
Yes. Okay. So I was actually talking to Jason Bodner about this. He's obviously been a guest on our show, and their facility that Meta's building in Louisiana is going to require more concrete than the Hoover Dam. Okay. So yeah, no, it's big. And it's real. They have to go where there's gas because there's not enough electricity to hook all this stuff up. So they have to generate their own electricity. And fortunately, Louisiana has a lot of gas for them. But it's the AI wars are on, and it's going to be accelerating for years.
Well, while we're talking about AI infrastructure, there's a lot of drama around Supermicro. Oracle allegedly canceled their orders. So is SMCI in trouble, or is this overblown?
Well, we'll see. I haven't seen any analyst cuts. Supermicro has over a 3-year order backlog, and most data center related companies have huge backlogs. That's what's driving a lot of stocks right now. Although their sales are forecasted to be up 171%, their guidance on future orders is going to be a big deal. And Oracle's trying to become the biggest data center out there. Now, we'll see. That was just a rumor. The shorts have been trying to attack the data centers this week. I want to see if there's any analyst cuts. And if analysts start cutting estimates, then I'll have to put Supermicro on probation. But right now, I just want to celebrate the 171% sales growth that's forecasted.
Well, speaking of all this drama, there was this Apex News story that posted on YouTube that was claiming that half of America's AI data centers are going to be canceled due to power shortages. How realistic is that? Should we be worried?
That's a bogus article meant to aid and abet short sellers that are trying to prick the AI bubble, for lack of a better word. But the bubble's still growing because the order backlog is getting bigger and bigger. Again, during President Trump's State of the Union speech, he basically asked the data centers not to hook up to the utility grid, okay? Because it doesn't want costs to go up for consumers. So what they're doing is they're getting their own natural gas lines, and they're generating their own electricity via the turbines from GE Vernova or the fuel cells from Bloom Energy. So that was a bogus article. That basically says you got to plug your data center into the grid, and that's not what they're doing. They're generating their own electricity. Remember, we're the Saudi Arabia of natural gas. We've got more gas than we know what to do with. They flare it still. So instead of flaring it, let's just have it generate some electricity. And that's what's going on. And this was, again, a report to aid and abet short sellers.
And to get views.
And to get views, it's clickbait. Yeah.
So you mentioned GE Vernova. Let's talk about them because they absolutely ripped this week. What happened there?
Well, the biggest news with GE wasn't so much they beat and guided higher. Their orders in the first quarter were double their sales. So they had over $9 billion in sales, but they had over 18 billion new orders come in. So everybody's looking at these order backlogs. So that's what's really driving all the data center related things. And Comfort Systems was another one that announced, and their order backlog is ridiculous. And that's just, HVAC for air conditioning. So orders are just piling up. The data center, again, construction is more than half the construction in America, and it's going to go on for some time. And then we have all the onshoring because of the tariffs and other things. And of course, Trump pressured companies to onshore as well, like the pharmaceutical industry and all. So yeah, we're in the midst of a boom, and it's a very narrow market, but it's a real boom.
Now, I do want to talk about Tesla because they did beat earnings, but there's still a little bit of drama with them. What's their story?
Well, believe it or not, removing the EV incentives probably helped them, okay? Because they were already dominant in the Americas on car sales, and now they're even more dominant because their competitors just weren't making money on EVs. So their actual sales and earnings were better than expected. So that was good news, and they're probably getting a lot of orders now because of gas prices. The bad news is Tesla's always transitioning fast. And of course, one of their factories is going to be making the Optimus 3 robot. And Tesla, is led by the visionary Elon. And Elon Musk likes to paint a picture of where we're going. So Optimus is eventually going to be in our homes, doing our dishes and laundry and walking the dog. And initially, Optimus is going to go in the factories. In addition to that, when you go home, your Tesla car is going to leave and go out and be a robotaxi, and be working hard. So these are the visions this man has, and he has to monetize them, and they have to come into fruition. Obviously, on the robots, I think it's going to be a long, long wait. Walking the dog will probably be Optimus 25 will be walking the dog. Maybe Optimus 32 will be doing the laundry and the dishes, So it's going to take a while.
Now, quickly, Kevin Warsh's Fed confirmation hearing. Elizabeth Warren called him a sock puppet. Is he getting confirmed still?
Yeah, he's getting confirmed. There's a Senator Tillis, that didn't want to vote for him until they dropped the Justice Department investigation into Jerome Powell for the Fed building fiasco. It's a $3 billion building. And, Trump, the builder, can't figure out how they can spend $3 billion on a building. But that is being dropped as we're recording this. So he's going to get confirmed. But the sock puppet name that Elizabeth Warren gave him might last a while. You know what I mean? I'm sure Kevin doesn't appreciate that at all. And he's his own man. He wants to have the Fed be independent. But it's important to have new leadership. Our Fed has been too reactive, and we need a Fed that's more proactive with better econometric models. We had Eddie Yardeni on. He pointed out that econometric models are problematic. The more stuff you put in them, the more errors you can make. But, our current Fed is just 18 months behind, and that's no way to run the Federal Reserve. So I look forward to having Kevin Warsh come on board. He's doesn't like quantitative easing. He wants to shrink the Fed's balance sheet, and he does think AI is generating incredible productivity gains, which are non-inflationary. So there might be room for more rate cuts. The other thing that's interesting is our deficit is so big now. It's bigger than the entire Defense Department. It is a problem. Kevin Warsh was Scott Bessett's, our Treasury Secretary's pick. And those two got to work together to try to get rates down because our deficit's just too darn big, and it's going to be a problem. There may be some special action coming. We're not certain of that. That did not appear in the hearings, but worst case, that's what they may have to do.
So there has been a lot of talk that there might be a new Palantir. What is their competitor?
It's Anthropic, which is private now, but their Claude AI is perceived to be the best right now. And they did get quite a few government contracts. There were some tension between them and the Trump administration. I know one contract was pulled and given back to Palantir. So Palantir and Anthropic are going at it. Anthropic is private now, so you can't invest in it. Now, I do want to emphasize with AI, there's always going to be a new model. First, it was ChatGPT. Then it was Gemini. Then it was Grok. Claude has emerged as the best right now. So we'll see. We'll see who wins. But right now, Anthropic is winning, and they're private. But Palantir is a phenomenal AI applier and has lots of not only government contracts, but business contracts.
Now, we've been talking a lot about private credit. Let's talk about Blackstone. Their earnings did go up, but it seems like something is still broken within the private credit market.
Yeah. Private credit didn't add to Blackstone's bottom line. And they also mentioned they took a 1.4% hit on bank loans. And there's a lot of bank loans in private credit. So it just raised more questions. Also, the SEC is now investigating private credit more and more. Essentially, what private credit is they're trying to create an illusion they can get you an 11% yield safely. And what they're doing is they're leveraging these loans. And I've been a critic of it because I think it's somewhat deceptive. But the industry is going to police itself, in my opinion. Because if anybody loses money in private credit, that industry will collapse. And private credit is run by a bunch of ex-bankers. And what happens when a bank fails or has a problem, the other banks save it. They all come to the rescue. And I assume that the private credit companies are all going to rescue each other, because if anyone fails, it will trigger a disaster for that industry. So, but it was a big warning sign, and, might increase the redemptions of private credit.
Well, that's all we have for this week's video. Thank you all so much for watching. If you enjoyed it, please give this video a like and subscribe if you haven't already. Make sure to hit that bell notification so you know every single time that we post a new video. We will be ending our 10,000/now 11,000 giveaway this week, so make sure to fill out that link in the description if you'd like to get a free signed copy of Louie's new book.
Thanks, everybody.